Hey, my name's James Nicholson. Welcome to my YouTube channel. Now, in this video, we're going to talk about the Bank of England have just had their monetary meeting and they've raised the interest rates again. Now, what does that mean? What did they go into and what are their expectations going forward following this latest rate rise? So stick around. And if you're new to the channel, make sure that you do subscribe to the channel and hit the bell notification. We're on our way to 5,000 subscribers. We've got new content every day on property investing. I'm building a portfolio for my two girls, Georgia and Emily. You can check out the older videos on the channel and see all the projects that we've done so far. So subscribe, hit the bell, and check out all the other content while you're here. So, interest rates. We kind of knew this was going to happen. But yeah, they've gone up. So the interest rate has gone up from 4% to 4.25%. So just a 0.25% rate increase this time. Now, there was some speculation. This has been an up and down week, right? And so there was speculation that we could pause interest rates this week. And that was because in America, we had two banks that failed. We had Signature Bank, we had Silicon Valley Bank. Both of those needed bailouts and cost the Fed a lot of money. And so they were expecting that potentially we wanted to make it easier for UK banks so we would have some sort of pause. Then we got shock inflation data, which was higher. So inflation actually went up this month from around 10.1 to 10.4%, which is exactly what we're trying to avoid at the moment. And so that meant that they had no real choice to up the interest rates this month. However, what were the votes on that? So in the Bank of England, there are 9 people, so it's an odd number deliberately, so it needs to be a passing vote really that gets things through. And so there are 9 people in there and they voted. 7 people voted to raise the interest rates and 2 voted to hold, not to drop them, unfortunately, this time, which was interesting. I think the last month was 8-1. And so it's been around 1. There's been one person that's been talking about not raising rates for a few of the back-to-back meetings now. And so, look, it's getting closer to pushing it forward to sticking. Now, again, they indicated that they feel that we're pretty much at the peak of the interest rates. That's what the markets are pricing in as well. So it's looking like we really are at the top now, and we maybe wouldn't have had this rate rise if we didn't have that shock inflation data that came out earlier this week. So what's next? Well, going forward, they're talking about, they still feel that inflation is going to drop off a cliff next quarter, which is next week pretty much. It's not going to be on the 1st of April, but the next quarter starts in a few days, doesn't it? And so April, May, June, they feel in that quarter, inflation is going to drop significantly. Now, if you look through the Bank of England report, the reason for that is that gas prices are still dropping. There was a 26% drop in February. The futures market, which is the outlook on what prices will be down the line, that's dropping as well. So these are good signs that inflation will come down. Gas prices, wholesale, not that we're getting ourselves right now, but what they buy in at, are looking at some of them similar to the price before the Ukraine war, which is good news. So they're also saying that we've got slightly milder winter, although I know we had snow where we live. It's been pretty cold. But yeah, it's been slightly milder around Europe, which is good. Also, people have adapted. So people are using other means. They're using less energy. And so that's going to drive that price down. Now, why is it important that the energy price comes down? Because if the energy price comes down, that impacts pretty much everything that you buy, because energy is used to manufacture a product. It's used to get the product to the store. It's also included in your customers' disposable income, your tenants' disposable income as well. And so energy prices are really what's driven this inflation. Obviously, we've had money printing as well, but that's really, really hitting people hard. Now, they're also saying that we're still looking at unlikely to go into a recession. At the back end of the year, they expect GDP growth, which is interesting. So they're still predicting no recession in 2023, which is good news. The labour market has been pretty robust. We've still got fairly low unemployment, even with everything that's been going on. So that's good news as well. And so outlook, what we want to look at now is we're a property channel. So how does this impact property investors? Well, this 0.25% interest rate rise is going to impact you right now if you're on a variable rate. So if your mortgage is on a variable rate, that's going to hit you pretty much straight away. They don't hang around adding that on. It's also going to impact people that are looking to refinance or get a new mortgage. So all the deals will probably come off for 24 hours. They'll re-look at it and then they'll go back on. But I don't think that they're going to pass on that whole 0.25% to the deals in the market, because there were deals already that were lower than base rate that we were looking at last month. So I don't think mortgage rates, the rate that you actually pay, is going to change too much unless you're on the variable rate. And obviously mortgage companies as well are needing to be competitive to get deals because the market is a lot slower at the moment. And they want to obviously look at what they feel interest rates are going to do in the future. And so some of them may drop rates once we start seeing a flattening of interest rates. And so it's looking more likely than ever that the next interest rate meeting will be a pause in rates, which I hope, because inflation will have started to come down by then. The next meeting is not till May. We're not having one in April. So that's good. And so that's what we want to see, really. Now, as a property investor, there's a lot of people that have got a wait and see approach at the moment. And so that is impacting the market. 20% less transactions are happening in the market at the moment. That's really going to hit people like estate agents and solicitors, and all those kind of businesses are massively going to be impacted by that. But there's less stock on the market as well. House prices OBR are expecting them to pretty much flatline this year rather than a drop. We've already had a drop at the end of last year. They think maybe that will drop at the end of next year. And one reason for that is if you are in a deal, right? So say you're in a deal with a property already and you got that deal prior to all of this happening, 6 months ago even. Are you really going to look to sell your property and get a worse deal? Because that's what you're facing at the moment. If you do look to buy a new property or you look to sell your property, you're going to end up with a worse deal on the outcome of that, because interest rates are significantly higher than they were 6 months or even 11 months ago when all of this started. And so it's an interesting meeting, not that exciting. Another thing they did say is that they've got real faith in the UK banking system. Of course, they're going to say that. They're not going to say they're weak and they're concerned about them. But they're trying to instill confidence in that so we don't get bank runs. And if we can avoid bank runs, then that's going to help not get us back into the scenario of a 2008. That's what kind of triggered all of that stuff and made it really, really difficult. So what do you think on today's meeting? Do you think it was a good meeting? Do you think they could have done more? Do you think they should have gone up in rates? Or are you in the camp where you think that, look, enough's happened and inflation is going to come down anyway, so let's consider dropping these rates now and getting back to business? Let me know your thoughts on all of that in the comments below. Keep it nice and kind. Smash the like button, guys. That really helps me with the YouTube algorithm. And go and check out some other content on my channel, including this video right here.